You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday. Everybody's been working for the weekend, and by golly, here it is. 7th day of December, 2018. Are you on that naughty or nice list? We still got a couple days. A few shopping days to change your behavior. Get on the good stick. All right. Now, got a chart up. S&P 500 Emini Futures. It's a daily chart. And we'll talk more about that. But if you can't see the chart, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. In about 30 seconds, you'll be registered all the way through the end of December. You only have to register once per month, but you do have to register once per month. You'll get an invite every day. Click the link. You're in the show. One-click access. If you're away from the office or the desktop and you want to tune into the show and see the charts, go to youtube.com/CFRN/live. We make it very, very simple for you to stay tuned in. It has been two of the most incredible weeks here back to back that the markets have seen in quite some time. Now, if you watch the financial shows on television, they've all got their reasons. There has to be a reason. This most recent sell-off, of course, being laid at the feet of the arrest of the Huawei CFO, Meng, who apparently has been playing footsie under the table with Iran, supposedly. We don't know. The big question that's hanging heavy when President Trump sat down last Saturday night with the Chinese president, did he already know what they had on Ming and that they were going to attempt to arrest her? If he knew that and didn't tell Xi Jinping, is that right or wrong? Is he acting in the best interest of our country, diplomatic relations? This thing gets messy, and it's far from over. And so the volatility that we're seeing, while it may not be as volatile every day as it has been these last 2 weeks, I think we have volatility that's here to stay. And we'll talk more about that as the show progresses. The main thing I want to say is, whoever you are, wherever you are, I'm so glad you're here. Thanks for joining us today. We've been at this now. We're in our second decade of broadcast history. So grab your day planner, pencil us in for the next decade, okay? Got a little bit of news for you. And in this bit of news, this may make you nauseous, Michael. I don't know. Leading U.S. cryptocurrency exchange Coinbase has added support for PayPal as a payment method for withdrawals, allowing users to directly transfer fiat funds into their PayPal accounts. The availability of the withdrawal option is dependent on an individual's country of residence. An announcement published on its website detailed that Coinbase has introduced the ability for customers to link their PayPal and Coinbase accounts. Once implemented, Coinbase customers will be able to either withdraw fiat currencies to PayPal or sell their cryptocurrencies and use the PayPal account to receive the fiat money. To take advantage of the service, users need to ensure they have completed all identity verification steps on Coinbase and that their listed country is correct. Then they will have to go to Settings and click Link a New Account if using the desktop platform, or add a payment method in the mobile app. After selecting PayPal, they'll be prompted to log into their PayPal account. Currently, Coinbase customers in supported regions can only use PayPal to withdraw fiat or sell cryptocurrency. Purchases of digital assets with PayPal, not available yet, but they're coming. Gazprom Bank, the Swiss subsidiary of the Russian state owned by the same name, plans to launch a digital asset management product in cooperation with two fintech companies, Avaloq and Medico. The new financial service will be based on the Silo infrastructure, a crypto asset custodial solution developed by Medico. According to a press release, the partners will offer their clients the ability to perform crypto transactions without the need to set up a separate cryptocurrency wallet. They will be able to monitor and control both their fiat and digital funds through their accounts. New service will be officially launched in 2019. Gazprom Bank, which is the third largest Russian bank by assets, announced its intentions to begin limited-scale cryptocurrency operations through its Swiss subsidiary earlier this year. In March, its deputy CEO said the bank is doing that in response to demand from some of its large customers. Hardly a day goes by that we don't announce on this radio program some new bank or financial institution getting involved in the crypto space. Now, we talked about this way back last year. Banks have to get involved or they become irrelevant in this new economy that's developing. And it's developing. I don't care what the guy on TV says. It's developing. Yes, prices are down. I understand. That's okay. If you were willing to pay 20 grand this time last year for a Bitcoin, are you willing to pay 2 grand? Or are you going to wait for it to go back to 20 so you have confirmation that it's real and you'll pick it up then? That should keep you awake tonight. CoinEx, India's leading cryptocurrency trading platform, has announced it's inaugurating a new development center in Bengaluru, the country's IT hub. The unit will be exploring potential implementations of crypto and blockchain technologies in various industries. According to sources, the development center will work to address different issues related to finance, payments, security, and banking operations on a global scale. The Mumbai-headquartered company has already secured backing from leading venture capitalist companies, including Singapore-based bNext and San Francisco-based Pantera. If you don't know the name Pantera, you can Google it. Google Pantera Capital and see what they're getting involved in here. CoinEx also noted it's currently expanding its workforce. In addition, the company plans to allocate $1 million for investments in the development of the blockchain and crypto ecosystem in India. CoinEx co-founder and CEO expressed confidence in the diversification of the platform's product offerings. He also emphasized that digital assets exchanges are at the epicenter of all blockchain-related development today. And last, CoinSquare, a major Canadian cryptocurrency trading platform, has acquired wallet solutions provider BlockX for $12 million. Now, I brought this up yesterday. If you want to be in this space, you got to have a weird name and spell it funny. B-L-O-C-K-E-Q. Go ahead, say that once really fast. B-L-O-C-K-E-Q. Hold on for me just 1 second.
Okay. Another lower high, a lower high, a high. Now we need a lower low. That's what we need there to continue this. Yeah. The S&P daily. Now, where did Dwayne say yesterday that this was going to be going down to? Dwayne and John were talking about it. 2603 is a possible stopping point from here. If we break down below, close down below 2625, then 2603.
I'm sorry, what?
Is the next stop. Hey, Dwayne.
Hi. Okay. All right. Let me finish this up real quick.
Okay.
According to an announcement, the crypto exchange plans to take advantage of the technology developed by BlockX in order to expand its products and services using the Stellar network. The startup has so far released a number of private wallets, including desktop versions of Mac OS and Windows, as well as mobile apps that are currently available in the App Store and the Google Play Store. There's your little bit of news. Let's take a look at the numbers.
Okay. Yeah, we lost audio for a second there, Dwayne.
Yeah. All right, currently now these are cash markets around the world. We'll talk futures in a moment. The Dow's currently down 365 points, 1.5%. NASDAQ down 137, 2%. S&P 500 down 38, 1.5%. And the Russell 2000 down 13.5, almost 1%. And the commodity basket, crude oil gained $2.08. That's a 4% gain. trading 53.57 last. Gold up $7.50. Go gold. Trading 12.51.10 last. In the Asian markets, the Nikkei up 177 at the close, almost 1%. Shanghai gained almost a point, and the Hang Seng lost 92 points. In the European markets, FTSE closed up 74. That's 1%. The DAX down 22, and the CAC up 32. So there you have it. We got a mixed day in Asia. We got a mixed day in Europe. And it's a big red radio day here in the US of A. With that, we'll go to Michael, get a recap of everything that happened in the live training room today.
Okay, I am ready. Let's bring it over here. Over here. And there. And, yeah. Let me bring this up too. This very important thing. Okay, I'm ready. Are you ready? I'm guessing Dwayne's ready. All right. Good afternoon, everyone. Today is Friday, the 7th day of December, 2018. Here, if you want to take a free trial with us, go to the home page here at CFRN.net. Right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click that link, we don't know that you took the free trial, so you got to click on that link. Okay, make sure you click that link. Let me just go through and see something. Okay. Recap. If you're going to look at the spreadsheet, you did all the CFTC risk disclosures down at the bottom. Today, as I said, is the 7th day of December 2018. Made 4 ticks in the euro, 6 ticks in crude, and 7 ticks on the ES. That put us at plus 172.50. 172.50. Today it took 39 minutes and 5 trades to get to the goal for the day. At that point, we're at 107.50. And we took a total of 8 trade opportunities today. You're going to see we missed a bunch of trades because we had an open house, and I was answering a lot of questions today. Gross monthly profit right now, $677.50. That's over 4 days, averaging $169. And on the year now, we're at $35,651. It's over 226 days, averaging $157 per day. That's one contract, 2 hours per day. Oh yeah, the same thing with Square, Frederick. Same thing with Square. They shut down our account. The thing that Frederick was saying is just 1 year ago, PayPal refused to let us pay for the CTG coin with PayPal. Now they want to be a major player in the crypto world. Yeah, you know, it was just a matter of time before they came around to it. Square came around sooner, but Square froze our account. And they said in 90 days, we'll unfreeze it. And so, yeah, things got messy. And that was November last year. It was just about this time last year. It was. And things just got messy. And now they're all major players, right? Crazy. Crazy. Okay. So I did this part. Now, let's go look at what actually happened today. I was looking at this on the daily because Dwayne had his daily up. And you can see down here, there is buying pressure. Lots and lots of buying pressure. So if it gets down there and it starts to bounce, you know, this one bounced all the way up to here. This one right now is still bouncing up, but it's got a big red candle today. But it looks like it's still bouncing up. So we'll just have to wait and see what happens with that. Okay? Okay. Now, let's go through what we did or didn't do. Gold really didn't give a lot of opportunity today. Most of it was right here. This was most of gold today. And there was a bounce off the BBC right here that we missed. And if you If you didn't get that, there was another shot at it right in here, right here, for that. Okay, and since then it was really choppy. It's possibly going to give a short trade here. We've broken dynamic support. It's possible if we get a down close on this bar that it will continue on the downside. Euro. Well, on the euro today we had two trades. This one right here that was break even. It eventually went up, but it was break even for us. It looks like, actually, I didn't want to do this because I didn't think we were, I thought it was a head and shoulder. And this was the head, this was the shoulder, this was the shoulder. So we should have waited until it broke the shoulder. And we did. And we picked up 4 ticks down here when it broke the shoulder. Since then, not really anything. Well, during the break in here, there was a shorting opportunity there. And probably another one right here. Okay. But we ended up with plus 4 on the euro today. Okay. Now the crude oil, the crude. Let's back that out. And wind it back. We had natural gas inventories come out today. We had a bunch of stuff come out in the pre-market. Now I highlighted this area, and I'll go over that in just a minute. But we missed a whole bunch here on crude. Started out here, we missed that long trade, which would have been profitable. We missed another one right here, which would have been a break even. We missed a short here that would have been profitable, a short here that would have been profitable, a short here that would have been profitable. Like I told you, we missed a bunch of trades today because we had the open house and I was doing a lot of training and talking and answering questions. This right here I wanted to highlight because this is our highest probability trade setup. It ended up being a break even for me, but you see price pulled back and hit the BBC. Down here in the slingshot, the cycle is blue and above the green line. Up here, the MA1 is blue and going up. Highest probability trade setup right there. And it put in a higher swing, gave about 10 ticks. That would have been the goal for the day. We missed this one here that would have been profitable, this one that would have been profitable. We finally grabbed one over here, picked up a couple of ticks on it. We missed that one that would have been a break even. We missed this one, which would have stopped out. This one, which would have been profitable. This one, which was a break even. That one, which would have been profitable. That one, which would have been profitable. That one, which would have been profitable. And then we started getting into the break. Somewhere in here, we picked up 4 more ticks. I don't know where that was. But somewhere in here, we picked up 4 more ticks. I don't know. I don't know. Somewhere in there, we picked up 4 more ticks because we ended up with plus 6 on the crude. And then getting into the break here. Let's see. Let's put the whole break up and then we can see. There was a bounce off the BBC right here. That would have been profitable. Then nothing. Then nothing. Then nothing. Then nothing. Then a short right here. That would have been profitable. Then nothing and nothing and nothing. And that was it on the crude. We ended up with plus 6 on the crude. On the ES. Hang on. Okay. Now we'll scroll back. No, I didn't take that one into account. That was a 14-tick trade, Frederick. I didn't count that one. I only have 6 that that I wrote down anywhere on crude. I didn't count that toward the total. There was a trade that I had left on. I went and took a quick break, and I came back, and it was profitable. And I took 14 ticks profit on it in crude. And I said I wasn't going to count it because Wasn't following the rules to get into it. And look at the ES. Thing is just all over the place here. Okay, I'm scrolling back here, as you can see. But I highlighted some of the trades. I'm sure I missed some, but there was a short here that would have been profitable, a long here that would have been profitable, a short here that would have been a break even, a short here that we actually got 5 ticks on, a short here that we missed that would have been profitable, a short there that we missed that would have been profitable. And this big move down to the weekly trading zone. Then it came back up to the zone, then back down through the zone. And let's see, there was a short here that probably would have stopped out. That was followed by this huge leg down, but it's going to give a trade setup till down here. And that would have been a momentum short, probably break even. Then another one here that would have been profitable. Then it changed directions. And we grabbed, what did we get here? 4 more ticks. No, that's Crude. We grabbed 5 ticks on the first one and 2 ticks on the second one. So on the ES, we were right there. We picked up 2 more ticks to put us at +7. And then look at the way it just fell right through the weekly trading zone right here. That's the knife through butter thing that Dwayne talks about right there. There was a short right here that would have stopped out. And now we're getting into the break. I don't know, I highlighted a couple of them in here. A short here, there was a momentum short, break even. A short here, momentum short, profitable. Another momentum short, profitable. Then the slingshot changed, and it looks like there was a long here that you could have taken. That probably would have been a break even. Wow. Yeah, there was a lot of movement during the break. In here was a lot of chop. Okay, if you look down here at the slingshot, you can see that there was a lot of chop in there because the cycle's just flipping around in the middle. Wow, yeah. I did not see all this movement during the break. Anyway. Let's minimize that. Slide that all the way over. Go here. A newbie question, what is the zone? I'll tell you this, Dan. At the beginning of every week, 6:15 every Monday morning, we, all active partners, get weekly trading zones. Now, weekly trading zones, let me show you what they are. Hang on. Yeah, I want to find this week's. Here they are. You get an email like this when you're an active partner. You'll get an email like this that's got all this information, register here, all that, then weekly trading zones. These are, see, 28.44, this is for the ES, so 28.44 is the lowest, 26.78 is the highest. This is the Dow. 26.240 is the highest, I think, and 24.685 is the lowest. Oh, 28.44 is the highest and 26.78 is the lowest. Yeah, I did that backwards. Okay, and this is the Russell. So 15.70 was the highest, 14.91 is the lowest, in crude and gold and the NQ. Anyway, those are areas that the market is attracted to, and they're good for the entire week. So if you look at the ES, I only put them on the ES, okay, because it can keep me out of trades. Now, started out way up here, and we ended all the way down here. Now, if you start out the week above the highest weekly trading zone or below the lowest weekly trading zone, you're almost always going to end the week at the opposite end. Like we started out up here, and then just bam, 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 bam. In this weekly trading zone right here, there's 1, 2, 3, 4, 5, 6 of them. This is the lowest one right here. So it's likely, I think that's the lowest one. There might be one more below it. Nope, looks like that's the lowest one. So it's likely that we're going to end the week just above this, okay, it would be highly unlikely to end the week below it, but it's possible that we can. Okay, and that's what the weekly trading zones are. You become an active partner, you'll get those every Monday morning at 6:15 a.m. and they're good all week. And you can see, well, you may or may not be able to see that it's attracted to these areas. Okay, and when it gets there, it usually comes back. If it goes through it, it'll usually come back to it. See, like it did here, came back to it, and that's been going on since 2009. Okay. Yeah. And let's see. Okay, so I'm going back to my spreadsheet. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 7th day of December 2018. We made 4 on the euro, 6 on crude, and 7 on the ES. Put us at plus $172.50 this morning. That's one contract. Okay. Today it took 39 minutes and 5 trades to get to the goal for the day. At that point, we're up 107.50, and we took a total of 8 trades. So on the month, we're at 677.50. That's over 4 days, averaging 169 per day. On the year, we're at 35,651. So over 226 days, averaging 157 per day. Now that's one contract. If you were to add one contract per month and do everything exactly as I did, you would now be at $222,495 on the year. Okay, that's adding one contract per month. And that's pretty good money. And it's going to keep going up. Okay, if you have not taken a free trial with us, go to the homepage at CFRN.net. And right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page. On this page, all we ask for is your email, your first name, and how you found us. Hit that submit button. Okay, once you hit that, then you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, then you will... if you don't click the confirmation link, then we don't know that you took the free trial. Okay, and yes, in January, back to 1. Okay, we always do 1 in the room anyway, but I just, for illustrative purposes, I just want to show you if you added 1 contract per month, then at the end of the year you'd be at 12 contracts, and you'd be at 12 contracts, and the numbers, 677.50 is what you make with 1 contract so far this month. In the 4 days I think that we've had, right? And if you do 670, hang on, let me clear that. 77.5 times 12, you'd be at $8,100 so far this month, right? 169.38 average per day. 169.38 times 12. It's $2,000 per day. Okay. That's where you want to be. That's what you want to try to get to. Okay, but every year it starts over again. You see this year in January, we made $2,500. In February, $4,800. Then March, 19, then 42, then 32, then 23, then 18, then 2,000, then 19. Then our best month of the year so far was October with 5,900. And earnings come out in October. That's a lot of the reason why. December is usually a good month. I'm going to knock on wood right now because we had one December about 4 years ago. That was our worst month of the year. But I mean, it's starting off okay. We're only 4 days in and we're averaging 169. That's good. I think it's good. It's 1 contract, $169. Okay, so I showed you guys all this and this and this, and that's it. And with that, we can pass it back out to Studio A, where Dwayne is sitting overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, I am.
I know I went on a little bit there.
Oh, no. No, it's good. It's good for people to hear.
Okay. John is not out there right now.
Okay.
And generate reports.
Try that again. Here we go. Got it? Got it.
Yep, I see it.
Okay.
I see it.
So, a question was posed this morning at the end of the live training room. For those of you that were there, you heard the discussion. One of our partners, Bill, passport holder, he asked if the alert that went out pre-market to consider being short the S&P, if that was still valid. And let me bring up that number and that alert. Consider selling the ES 2658 with a final target at 2650. We went from 2658, and my answer to him was yes. And so the price went from the trigger at 2658 down to 2652 and a quarter. And because important prices at important areas are almost always tested, price popped right back up to the trigger. In fact, it popped up above the trigger. And so I said, okay, I said what I just said. I said, now with that information, I'm curious what folks will do with that. Well, you see where price is now at 2647. Part of the instructions in that alert also said trail if possible, which means, let's go to a smaller time frame. We'll come back to this in a moment. S&P 500 Emini Futures. Do we have an exit signal for that trade yet? I mean, it's already gone, you know, a little bit beyond the final target. And targets are great, and final targets are great. However, this move here, so 27.77, okay? Here's the swing low. Did we catch it? No. Did we fly right through the target and the final target? We did. Was there any reason to get out of the trade? No. There's our exit signal at 27.09 and a quarter. Now, what's going on over here? I'm going to show you. Everybody wants to know, how do I trail my stop? How do I know when to get out? I'm going to show you. See the step line? See the red CFMA1? Even though the final target's way up here. Why would you get out of a perfectly good trade? There's no reason to exit the trade until the step line, because this has to happen on every move. It's how markets work. Price comes down, it starts to walk sideways, and the CFMA1 and the step line go, no, not yet, not yet. So we drop another 27.20 down to, get out of the way, tooltip, down to 26.95, and then we start the sideways walk. But up here, look what happened. The step line crossed. You see how as we're falling here, step line's on the left side of the CFMA1. When it crosses, it gets on the right side of the CFMA1. In a short trade, all you're looking for is the first green candle to close above that step line on the back side of the CFMA1. That's the market saying, yeah, you might want to get out. Okay? Did it get you out at the swing low? No, it never ever will. Did it get you out better than the final target? which would have been a perfectly fine trade to go home with for the day. But all this, in order to pick up this, in order to turn a 4 or 5 point trade, whatever it was, into 68 points at $50 a point, entering here and exiting here equals $3,340 per contract traded. You had an exact number to get in at, you had an exact number to get out at. Trading's not easy, but when you have the tools we provide, it can be simple. So back over here. Do we have an exit signal yet? Not even close. Look at this step line. Where's it pointing? Down. Is it pointing sideways? Is it getting ready to walk across? This thing ain't even caught up to it yet. Now, here's a scenario. When we get down to the low of the... What is this, the low of the week, the quarter? Give me some perspective, Michael. Kidding. Low of the week. We'll just leave it at that. All right, low of the week. So as we approach that, will we anticipate a bounce? Yes. Will this have had time to catch up to provide a good exit signal? We'll see. We'll have to wait. You won't get an exit signal on every trade. When there's an extended move like this, you will. When there's an extended move like this, the NQ, selling here, catching an exit signal here. This price, 68, what was it, 68.28.2. Then the exit came 68.22. Come on. Must be a lot of volume cruising through the exchange. Platform's not performing. At the low, 66.87. Say it again. 66.87 the low. Entry was 68.22. Michael, you there?
I'm here.
You doing math?
66.82. Say it again.
68.22.
68.22.
Do the exit signal.
Okay.
Which is 66.98.75.
124.
So 124 points.
Yes.
You knew the entry to the tick. You knew the exit to the tick. And you take that, you multiply that times $20 a point. What do you come out with? About 2,500 bucks.
Let me find my calculator. Here it is. Times 25.
Times
3,100 bucks. Is it 20 or 25?
$20 a point.
Oh, sorry. Yeah. Times 20. 24.80. Yep.
Now that's per contract.
Yes, that is one contract.
And how much does it cost to trade one contract?
Well, it depends from broker to broker. But, are you talking about the margin, or are you talking about?
Yeah, the margin. Yeah.
The margin, 500 bucks
For one contract.
for one contract.
So if one of our traders who's earned the right to trade 10 contracts, and that doesn't happen overnight, folks. We do it one at a time. You got to prove yourself before you go live. Then you need to increase your account balance by $2,000 with one contract. Then you get to take money you earned in the market and add a second contract. Then you go on a calendar-based schedule, and with money you earned in the market, you'll add your third and your fourth and your fifth. So when you've earned the right to trade 10, this trade right here, that was good for, what was it? 2,400 bucks? 22? What was it?
24.80, I think.
24. Okay. So the guy that has earned the right to trade 10, I don't know. That's a lot of numbers. Is that, I don't know, how much is that?
Yep. $24,800.
Right. Okay. Did this really happen? Did this alert really come out here? Did this exit signal really print here? It did. Was there any reason to get out of the trade before the exit signal? Well, I know how most traders think. I mean, we all, this thing drops like a rock, and we're looking at a couple grand just in this 30-minute candle. Some people are going to just grab some profit because it's there. And if you had pegged this right at the bottom, you know, catching a swing low like that is pretty tough. Some say, you know, don't try to catch the falling knife. But anyway, there. From there to there. If you're a 1 contract trader, 2 grand. If you're a 10 contract trader, 20 grand. How long did that take? I don't know, an hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7. I don't know. It takes as long as it takes from the entry to the exit signal. Not every trade gives you an exit signal. That's why you have targets and final targets. If it blows through the target, if it blows through the final target, you only want to exit the trade if the chart tells you to. The best place you can get your information about trading is from the market. Yes, they have very clever guys on TV that talk about all kinds of stuff. And even clever guys on the radio that talk about stuff. When you learn to take your direction from the market, from the chart, okay, in a very simple manner, this is where you have a very high probability opportunity to become consistently profitable in the markets. Everyone wants consistent results, but very few people actually bring consistent effort to the table. That's why you hear us do the same thing every morning in the live training room. Over and over and over. That's been going on again. That's been going on for 5 years. Concierge Trade Alerts. There was 3 years of public beta, and I think they've been live for 3 years. So for 6 years, you've heard me say the same thing about them. Over and over and over. And since we launched Logic 247, we did a 3-week public beta. And now since we launched, we have 17 weeks under our belt as of today. Sunday night, 6 p.m. Eastern, starts week 18. But anyone who goes through the channel, if you're a passport holder, or if you've been on the trial and had access, you see me saying the same things over and over. You never once have heard me say, well, this time it's different. Because it's not. The market has fundamental principles and rules that it operates by. When you learn to base what you do based upon what the market's doing, not what the smartest guy in the room said it's supposed to do, or he thinks it's going to do, or it should do, why not just do what it's doing? I know that sounds incredibly simplified. I hope so, because we spent a whole lot of time, a whole lot of energy, blood, sweat, and tears to make it simple. It's not easy. It'll never be easy. There's no easy button in trading. But it can be simple. Here's where people make their mistake. Okay? They want something. They can just pull the trigger and be right every time. Problem, that world doesn't exist. But you think it does because people have sold you on that idea. Everybody wants to teach you the big market secret. You know, the secret your broker doesn't want you to know. That's the most ridiculous thing I ever heard. The more you trade, the more money you make, the more money your broker makes. If you're trading and not making money, pretty soon you're going to blow up your account and go away. Now your broker got to go out and find a new client. Believe it or not, your broker actually wants you to succeed. And I think we might have the only broker that I've actually seen put effort into that. Our broker sits with people, and whether you do business with our broker or not, we don't make any money off that. We don't get a kickback. We don't get a commission. We don't find nothing. And we don't want it because we don't want to muddy the water here. We want to be able to tell you that he is a very unique individual, because he is. Because he works very hard. Because he cares about people. If you're down, he'll pick you up. If you're getting too big for your britches, he'll take you down a notch. Because he wants you to be successful. He would much rather have you still with him 3 years from now than be out there beating the brush looking for some new client. He works really hard to do that. When you call him, he answers the phone. In 8 years, I might have called there and got an answer machine or voicemail a couple times. I think one of those was after hours. So this whole thing is trading the markets. How hard do we want to make it? How simple do we want to make it? We can make it real hard. We can go get us some stochastic, and I'm not knocking any of these things. They all do what they were designed to do. We can get some MACDs up in here. We can get some stochastics. We could throw in some Bollinger Bands. We could go look at the advanced decline line. We could look at the trend. We could look at the tricks. What else, Michael? What's some other popular stuff that people...
CCI, that's another one.
Oh yeah, CCI. You notice we don't have any. We don't have any of that stuff.
No.
In fact, I must have just loaded this because I'm not a maroon guy. I'm not part of Maroon 5. So this maroon line is used for something different. Normally, when I double click it, it'll open my properties box. You click it one more time, forget about it.
You can always right click it if it's highlighted.
Yeah, there we go. My platform seems a tad sluggish. Yours?
Not right now, no. No, mine's good right now.
I just rebooted yesterday.
But
which is a rare occurrence for me.
But somebody earlier in the room.
I know, yeah, I saw that.
Was
Yes, so see what I did? I turned that to false. I took out the maroon line because it's not necessary for me. Okay. Enter here. Exit here. Now, let me just ask a very simple question. This is not a trick question. I'm not setting you up. I'm not going to put you in the hot seat and make you sorry that you responded, as some do. I'm just going to ask you an honest question. Is there anything... Remember, I'm going to write this in just to simplify. That's 6822. So if somebody told you, hey, you might want to consider selling 6822 on the NQ. It's this is a real life example. This is a real live alert that went out. Okay. So if somebody said, somebody that you had observed, and I think they know a little something about this, and I'm trying to learn. 9 out of 10, by the way, 9 out of 10 traders fail because they do not have a teacher. And I'm not talking about some trainer at it. I'm talking about a personal mentor. 9 out of 10 traders fail for that reason. Now that's an astronomical figure. Navy SEALs, if you make it into Navy SEAL training, they have a higher retention rate than 1 out of 10. Are the markets really that hard? Are they really that tough? They are, because we confuse the issue. If we can just embrace the simplistic things. Now, I lightheartedly issued a challenge yesterday. I was thinking of the amazing Randy and his $1 million offer that if anyone can prove to him the paranormal exists, anything from mind reading to telekinesis, any of this stuff, spoon bending, he'll give him $1 million. It's been, I think, a couple decades and nobody's taken his money. Now, I'm not going to give you $1 million, but I will give you some cash and valuable prizes if you can bring to me an indicator set that has out. And I'm going to make this real simple. You see this red and falling right here? And do you see this red and falling? If you can bring me, show me an indicator set that has outperformed that over the last 5 years, I will give you cash and valuable prizes. I'm not bragging, I'm not boasting. I'm trying to make your life easier. Now, if you don't want to use this, whatever you're using, take about half of it and throw it out the window. Figure out what's contributing to your bottom line and what's not. Get all the noise and confusion off your screen. Half the stuff is just confirming what the other stuff already told you. It's just painting it or graphing it or indicating it or oscillating it a different way. You with me? Trading's not easy, guys, but it can be simple. Blue and climbing. You get a bullish cross here. We're blue and climbing.
John is in the audience, by the way.
Okay. Bullish cross. What's required to take advantage of this move when you've got blue and climbing and blue and climbing? Get long. If you have any indicator that can outperform this, I said it yesterday, I'm saying it again, I'll give you. Bring it to me, and prove to me that it has beat this over the last 5 years, I will give you. What did I say? Cash and valuable prizes. And I mean that, all right? I want to get you thinking, how long are you going to chase? Now, I know a lot of you are doing great, but I also know a lot of you, yeah, I talked to someone the other day, 5 years. Really nice guy. He's been really trying for 5 years to get consistently profitable. We had our first mentoring session together. He's not a partner yet. We do that. People that are interested, I give you a 45-minute mentoring session and try to help you any way I can before you even become a partner or a passport holder. We had a very nice conversation up until I started showing him the trade setup and how we trade our methodology. Now, he immediately began to tell me that, well, I would have got in over here. Okay. Now, this is someone who just, 2 sentences earlier told me he's been trying to get profitable for 5 years. So we have to think about our mindset. What's real to us? What does contribute to a bottom line? What really is indicative of market movement? How do markets work? These are all things that we cover in our training. We cover it in the morning in the live training room from 9:30 a.m. to 11:30 a.m. And you have the opportunity to ask questions. Everything Michael does. Why'd you do this? Now, why'd you do that? Well, I don't understand why. Ask. And when you get into a session with me, same thing. Whatever you ask me, whatever you want to learn, whatever you need to be taught, whatever I understand and know about that, I'll teach you. Same thing with workshops on Thursday night. You ask, we answer, we teach. If you're struggling, if you're new to the program, we've got everything a trader needs at one low price. We have the methodology, we have the indicator set, we have Concierge Trade Alert service, we have the Logic 247. Now, people this morning that were able to follow that simple instruction on the S&P, and again, that's just one alert. Consider selling 26.58 to 56 to 50 and tip. Swing low so far. 26.62. No, I'm sorry. 26.4250. So it's gone, what, 7.5 points below the target. Now it's pulling back. Well, that's what markets do. Important prices, important areas are almost always tested. Is it going to go back to 26.58 again? It might. If it does, and it triggers again, that will represent the least amount of risk and the highest potential for profit. This unfolds day after day after day. I talked about this yesterday. Sunday night on the Globex 30-point gap higher open, I felt so sorry for all the people walking into this trap. I would not let my traders do this. I was on the horn immediately. Stand down. We're not buying this because it's overdone. And I specifically said I don't talk overbought, oversold, because those can become terminal positions. If the market is quote unquote overbought, you can get short and go broke being short in an overbought market. But it was overbought. That means it's supposed to go down. Or it's oversold. That means it's supposed to go up. You can stay oversold for days, weeks, months. How long can you stay underwater? I don't know if this is the case, but I'll say it. Someone in the live training room this morning asked Michael, hey, do you think there's any way price can close near 2,700 today? That sounded like somebody who might be short from 27. I mean long from 27, and they're just hoping that price can get back there and make them whole. I don't know that that's why they asked the question, but I've heard that question asked for that reason a whole lot of times. Okay, so if they're trying to get back to, you see, can you see why they might have bought 2,700 here? Now, what did it take you up to? 2709.75. We did have a hedge on that. Let me find it. I believe that's when we hedged. Yeah, right after I put out the sell order, I hedged it. Consider buying 2507 to 2707. Trail if possible. Weekly zone overheads 2718. And so, on the opening candle, we ripped up to 2709.75. Trade was 2705 to 2707. And when it reversed, we were positioned to be short with the next trade. So we caught this one and this one. None of what we do is witchcraft, black magic. We got no crystal balls. Think about the name. Logic 247. You know the alerts come out around the clock 24/7. And they're not based on some secret, some GAN thing or any of the other stuff that, you know, nobody really knows because they took it to the grave with them. It's just logic. Look at price here. When it went to walk sideways, okay? Our indicator said get out. The chart said get out. Okay. Now look what happened. Price walks sideways, it walks sideways. Each one of these is a 30-minute candle. It tried, it tried, it tried, it tried. There was a lid on this market. Hard. So what do? Get short at 2704, stumble right into 50 points. Over here. I didn't trust this. I didn't touch it. Any questions? I'm trying desperately here to show you how to make your 2019 better than your 2018 or 17 or 16. I can't promise you that becoming a partner or a passport holder is going to make you a consistently profitable professional trader. I can't do that, because I don't know what you're going to do with the tools I give you and the things I teach you. If you use the tools the way I teach you, and you do the things that I teach you, then you have a high probability of becoming a consistently profitable trader. By the same token, Michael's side of the equation, which he teaches every morning in the live trading room, you got to listen, you got to learn, you got to follow. You can question everything, and maybe it doesn't sit right with you. Well, then we won't be able to help you. If, however, you can come with an open mind and accept that maybe some of the things, some of the people have told you over the years about trading, maybe it doesn't bear the light of day. Maybe it wasn't really true. Maybe it was true for them, but for whatever reason, it ain't true for you. There's nothing that Michael and I do that you can't duplicate, because there's no secret. Does that make sense? Does that make sense, Michael?
Makes sense to me.
All right, let's talk to John.
Okay, let me open up his mic. There we go, John. Your mic is open.
John, welcome to the show, sir.
I was listening to the sermon just now.
So glad to have you with us. Thank you.
It was good, well presented, and you know, look. The hardest thing is to follow a system or a person methodically, and you know, we try to cover ourselves. I mean, you know, I don't think there's anybody out there on this planet who covers this basis like I do, or try to every day. I have the discipline there to do that. In other words, you know, look, I mean, look, right now, I just called the bottom. It was a very difficult bottom. I did a little bit of a better job today calling the bottom than I did yesterday, and almost nailed the exact low. And we had a pretty stout rally, and for a minute it looks like this is the real deal. But it's such a dangerous market right now, and the way that we spiked go on this rally while you were giving your speech is, you know, the kind of characteristics of this market. And the fact of the matter is, we are. I mean, I'm going to tell you something right now that you won't hear anybody else anywhere else in the world. We are absolutely looking down the barrel of an 87 type meltdown. This is the closest thing. I mean, we've been through some you know, drastic days, including the 2008, you know, October 2008, when we had, you know, we had rallies and we had limit up rallies and limit down and everything like that. But you know what? We never had an 87 type deal in 2008. We never had anything remotely like what has happened here in the last few days. And these 87 type things, they're a once in a blue moon occurrence, maybe once in a generation, and they come out of the left field, you know, in a way that just blows everybody away. And obviously, you know, this Sunday night, Monday surge that kind of, you know, had everybody saying, breathing a sigh of relief and saying, you know, we're off to the races. And then the next thing you know, we're down, give it all back on Tuesday and then some. And then had this catastrophic Wednesday and a holiday. I mean, listen, there's never been a holiday in the history of the world that happened like Wednesday. This is a one-off. It's never happened before. No. We've never had a 200 point down move in the NASDAQ in 5 minutes. I mean, come on. Listen, the trillions, they probably wiped out $1 trillion on Wednesday. Just in, you know, think of all the funds out there who are holding all these tech stocks. They, you know, cut down by 3% in literally the opening minutes of a market. This is very dangerous when this sort of thing happens. And we're, you know, we had a very, you know, I warned people about this yesterday. You know, the problem, what we've seen recently is we've seen these media, you know, these epic kind of rebounds. We've seen some of the most record rebounds ever in the last few months, but they get up to unchanged. Now the Nasdaq did go positive yesterday, you know, up about 45, 50 points, and it went a little bit higher, I think, after hours, but, or maybe it didn't, but we actually sold it and, you know, held it down, and then, you know, thought it was going to rally, and we got in about 30 points lower, and then fortunately our contingencies to sell below that low triggered in, and we watched it during the night and called the lows of the night almost, and got a real good rally, you know, back to this morning's high. You know, the market went back to the highs this morning, and I remember looking at it and thinking, oh my God, this is a double top here this morning. You know, on the Nasdaq and this S&P, you're looking at it right there. So, you know, these double tops, when you're in a kind of a bear market, they are deadly. Just the same way as a double bottom in a bull market is paradise, you know, it's heaven. So, and in a way, that's what's going on with this gold. I'll talk about the gold in a minute, but, you know, the reason why we're looking down the barrel of an 87 crash is, you know, first of all, I said a long time ago, you know, when you get a 100-point down day on a Wednesday, Thursday, Friday, in a market that's 25,000, it's not, you know, it's not nothing like 87, because remember, in 87 we were 1/10 of the price today. Remember that. So in 87, when we went down 100 points on the Friday, we were at 23 something, 2300, right? Sorry, am I getting that right? Yeah, 2300. Right. and next thing you know, we're 22. And of course, you know, by Monday, we were down to 1700 and 800. With the 500-point crash, which was a 22% drop in one day. So, you know, these things that we've alerted to before, I called them 87 light, you know, they were fractionally less than the real, you know, because remember, 100-point down at 87 is 1,000 points down today. And unfortunately, we're getting that, you know, we're getting up to those 87 type numbers, and we have not seen anything like this before. We had a couple of scares in 2008, but we didn't go all the way Thursday, Friday, Monday, Tuesday. That's the death knell of the 87, and that's what we're in right now, because it actually started sooner. We started Tuesday. We had a rebound yesterday, which kind of negated the down, but we still ended up down some on the Dow, I think, and we're just giving it all back this morning. And so the Friday is the most important day, because, you know, unless we have some kind of a meteoric rebound this afternoon, which, you know, you can never rule out, because you don't know if the Fed are really paying attention. They want to do everything in their power to avoid a Monday meltdown. And with all this political stuff going on, you know, if China does something crazy over the weekend, or somewhere else, you know, or if there's a breakout of hostilities or something out of, you know, something we just can't see coming. You know, there's Ukraine and there's all kinds of stuff out there. You know, that could create the scenario for a monumental gap down on Monday morning, which is what happened in 87. And then an acceleration into the afternoon and a total meltdown wipeout that doesn't end, hopefully will end on Tuesday. And if it does, then, you know, I think it might be an idea to do a special session if this happens to Tuesday morning, if we are in a real meltdown, to do a show early, so that we might be able to give some guidance, because anybody who's been through this thing before, they've got a couple of secrets that might catch the bottom. And I can tell you, we'll probably have you know, we had the biggest move up in ever on the S&P previous week. So that was the trap. You know, this is exactly what happened in 87.
Exactly.
Yeah, and you know, so, but if we do get an 87 lookalike, and we very well might, you know, Tuesday is the day you may be one of the most profitable days in your lifetime. You know, both on the downside and then possibly on the upside if we get one of these epic recoveries. So, I mean, yesterday would have been a hugely profitable day if you were able to take advantage of it. So, and you'd be talking about that on, you know, on the show. So, But right now, if we close anywhere like where we are today or lower, we're in trouble. There's no ifs, ands, or buts about it. Monday could come in sharply lower because you got European confidence goes out the window, and these panic comes in, and there's so many funds who are just up to their eyeballs in stocks at all kinds of higher levels, facing catastrophic losses. Listen. Stephen Cohen is one of the greatest traders of all time. He's managing 28 billion or something, and he's down. He's never had a loss like he has this year. This is his worst year ever. Stephen A. Cohen, Einhorn, down 28%. These guys are geniuses. They're some of the smartest guys in the world.
Yeah, they really are. And
they're losing huge amounts of money this year. So and funnily enough,
No. And simplified, why do you think they lost money this year?
They
Just
only
because
got
the market's
caught.
down doesn't mean you have to lose money.
True. Look, a lot of them are probably hooked up in stock. The way the top came in at the end of September, and just, look, I sort of, I was worried about the Democrats, winning the House before people started worrying about it, towards the end of September, and then it suddenly sunk in October, and that's half the reason why the market's down. And if you look at can you go to investment INV
To the
investment.com,
investment.com. Yeah, I can.
Okay.
You want investing.com. That's what you want.
Look, we've missed remember, we said, Jesus, we said it a year ago or more.
Is this the one you want?
Yeah, we forecast on this show a year ago or more that we thought that the economy would top out. Not quite a year ago, because we said it in January, February, that the economy would probably top out right on election day, and it pretty much topped out on election day because people went into election day with a optimistic outlook, and with the Senate going the right way and everything, and then unfortunately, as the days went on after the election, the extent of the House win by the Democrats began to sink in, and the market has been reflecting that, and that has just in of itself has started to slow down the economy. People managers aren't hiring as many people, so we're down like 45. They thought we'd create 200,000 jobs today. It's only 155. The manufacturing jobs
Stuart
were up
wanted
27.
300,000.
Who?
Stuart Varney.
Oh,
Yeah, he was very sad over the numbers this morning. He goes, I was here in the Reagan days, we were
he's living in a dream.
300,000.
He's living in a dream, that guy. Yeah, he's living in a dreamland. But look, we said it a long time ago. The Fed, the market's already slowing down. There's no need for the Fed to kill the bull. The bull's already wounded, and now, what's also been creeping up is the jobless claims. We talked about the 200, when they were down at 200,000 claims, adjusted for population, etc., is the all-time record low in unemployment claims. Without any shadow of a doubt, because it doesn't enough.
I want to think about this too. Okay, there's people that went unemployed the whole Obama administration.
Yeah.
Because it was kind of okay to just stay home and watch Springer, lay on the couch and watch Springer. If that's how you express yourself, if that's what you identify with, well, we'll send you a government check, and you can do that. Now these people have been, and they could always go, I've been looking for work and I can't find a job. Suddenly, they don't have that dodge anymore. They can't say, I can't find a job, because they got their uncle, their grandmother, their little brother and somebody else across the street all offered him a job at the same time. It looked pretty bad right now not to get up off the couch and go to work. Well, they've been back to work now for what, 3 months, 6 months? Now they remember why they got lazy in the beginning. Some people just don't like to work. Some people don't see the fact that, hey, I'm a productive human being. My efforts are making the world a better place. They don't see it like that. They see it as going and slaving for the man 8 hours a day. Hey, but the man gives you a paycheck. So you can pay for the electricity, to buy the flat screen TV, to watch the Jerry Springer while you lay on the futon.
Yeah.
You follow what I'm saying, John? There's people that have been forced back to work because of the economy, but they're people that don't really want to work.
Yeah. Well, look, we hit these record lows.
They work just long
the
enough
fact of the
to
matter
qualify.
is we
long enough to qualify for benefits. That's all.
Yeah,
right?
we were at minus 200 claims. Sorry, 200,000 claims, not minus. And we're now at 255. So there's been quite a jump percentage-wise in the number of claimants. And so all of these things are conspiring, and then this unemployment number comes out today. I mean, look, we've been talking about the Fed lowering rates, several months ago, if you remember. Yeah. People are probably scratching their heads and say, what are we dreaming? But the fact of the matter is the Fed has to do this, and I hope they get on with it. Look, they absolutely cannot raise rates this month, and I think that's probably almost zero chance of that happening now. And they should start lowering rates in January or February and get on with it.
This morning defending the Fed. Or at least saying that Kudlow.
Oh, yeah.
He was saying that the Fed's taking this action because of his own personal beliefs, not pressure from President Trump.
Yeah.
I'm sure he was sent there to say that, but I kind of believe that. I think that maybe there's a little bit of both.
Yeah. Yeah, no, Trump's got, it's the Chinese, somebody told one of the Chinese told, who's the fellow, the attack dog on Trump's team, told him that the Chinese said they haven't come across a president smarter this in 40 or 50 years. And Trump's right. I mean, listen, he tried to get the oil down before the election. He knows that's a killer. High gas prices. And he succeeded, but unfortunately not enough. He knows how bad rates, he's a real estate guy. He knows that rates kill the market. And look at New York, for God's sake. They're downgrading all these $40-50 million wish list of sales have been marked down tens of millions of dollars because they can't sell. And the things hurt at the top first and then filter down. So the writing's been on the wall for a while, and you got to avert another 2007 because the Fed has done it again. What they didn't get is that because they're coming off such a low base of a quarter of a point or virtually zero rates, the sevenfold increase in rates off that base is, it's just like it's a tremendous shock to the economy. And you got all these derivatives and everything that are very, very dangerous if they click into high gear, and look at the bonds today. We're 143, Dwayne. We were only 138 not so long ago. So that's a sure sign that the economy is slowing down. There's nothing more sensitive to markets than the treasury bonds, and to the economy. So it's the real deal. The economy is slowing down, but it may just be just a bit of a slowdown. Now, you're looking at our rectangular chart that you put up there, and how dangerous that is. I mean, the odds of this thing coming out of the top are decreasing. You can never say never, but it looks very bad today. And look at the hanging man yesterday, right?
We had
that hanging man
doji.
Doji
At the top. We got a hanging man over here, and then we got a doji here.
Right.
A textbook hanging man would have a little longer tail on it, but it's in the context and knowing that we're up against, it's wow. I know that with a historic chart and in hindsight, it's always almost always easy to say this, but the market has really been kind. I mean, it took us down and it took us right back up, and it took us right back down to the same spot, and right back up to the same spot, and right back down to the same spot. And folks, if you don't, that's very tradable. When the market behaves like that, it's incredibly tradable. So I know that you don't, most of you do not execute on daily charts. You trade intraday just as we do. But when you have this in mind, just like yesterday, when price came down and hit 26.21, we had said in the live training room that we thought we would find support and get a bounce at 26.22. So we missed it by, it was actually 21.25, so we missed it by 3 ticks, no big deal. And we're not prophets anyway. We're not even forecasters. It just seemed logical. It seemed logical that that's where buyers, they came in here and ran it up from, goodness gracious, they bought this thing at what, 2600 and took it up to 2800. That's a 200-point move. Then the sellers, they brought it right back down. So you had 200 S&P points down, and 200 up, and 200 down, 200 up, and 200 down. And you know, on this leg, guys, let me show you how. Let me show you. Remember, I always tell you, trading's not easy. It can be simple. Okay, gotta let it be. If you just did this with your trend line, trend lines are free. Your trading platform comes with an unlimited supply. If yours doesn't, let me know, and I'll put you in touch with a guy. He's got some trend lines fell off a truck in Brooklyn, and he can hook you up. All right. So a simple trend line would have said, okay, maybe this moves over and ever going to go back up to test the high. Wow, would that have worked out? It looks like it might. Yeah, could that? Now that's free, so it can't be worth much if I don't have to pay a lot of money for them. So what if I'm going to try it again. Oh, snap. Free, work twice in a row. Huh. All right, then we come down, right? And so, well, let's try it. There we go. I hope you guys are seeing the point here. Yeah, John, go ahead.
Sorry, if you could go to that investment thing again, it's
yeah, I still got it right here.
Yeah, I want to show you the. Okay, if you could go to the economic calendar.
Do we have any China news coming out over the weekend?
Don't know.
Saturday night, sometimes they put
go all the way to the afternoon. Go all the way to about 3:30 this afternoon.
Okay. Yeah, here we go. 3:30.
By the way, in spite of the jobs for the gold, speculative net positions.
Speculative net positions. Okay.
Okay. If you click on that.
Sure. Okay.
Okay, if you could push the chart up, just scroll down a bit.
Mm-hmm.
Okay. You see the way? You see the way this is? This is starting to break out to the upside. If you go to max, see what max brings us on that. Okay. Do you see how we're lower than like we were where we were in 2001? It's crazy. But look at this, look at the spike down, and look at the way we're starting to break out here now. You know, we could be looking, remember what happened in 2016? I mean, that is, look how, what happened is we kind of had a false start, you know, sort of like from 2009 to 2011. We had a false start, and bam, you know, look at the, we went to, you know, we went to the all-time record bullishness of all time in gold. More than 2011, 12, the whole thing. This is incredibly significant because it's kind of a leading indicator of where we're going on the next up leg. So with this, and remember, it's a sort of sentiment reading. So we're kind of a depression sentiment level here on the gold right now. Even though when we made this previous bottom, right, we were at 10 1046, that previous bottom at the end of 2015. Here we were at 1160 at the worst point, 1168. Nearly 200, 150 points higher or so, or 130 points higher, something like that. And this thing was lower. So in a classic similar sort of way to 1994, which became the beginning of the run to 10,000, from 3,000 to 10,000 on the Dow. And the same as being, it's rather very similar actually to where we were in 2011 market-wise, when the sentiment was lower and the short position in the market was an all-time record, just like it is right now. So what's actually going on behind the scenes is it's sort of like they've been giving the shorts more rope to hang themselves over the last month or two. We bottomed at I think it was 1168, and we're almost $100 higher, and the shorts haven't noticed it yet, because the way we've gone up has been sort of up a little bit, up, down, sharp corrections. Then we held 1200 really well. Then we had one more test that scared everyone, and then we were back up again. And now we're making new monthly highs. And if you look at the weekly or the monthly on gold, it kind of looks like we're looking at a possible upside explosion of the type similar to if you can put it up to what happened to natural gas. So I'm kind of looking for a 50 to 100 point upside move from here, maybe even a couple of hundred points. I mean, something really, really shocking that would just absolutely blow these shorts out of the water. And I would say that a lot of the shorts are short below 1250. Maybe even more short below 1200. The latecomers, the amateurs who got short late, they're already upside down, and they're facing increasing losses, and at some point they're going to panic and push this market up substantially. So I think, and all of the ducks are lined up, because as I said this a long time ago on the show, as soon as this unemployment rate starts rising, it's bullish for gold. There's just no getting. You can go back. It's a sort of a state secret. You go back over time, and the unemployment rate upturn of unemployment is a really good buy signal. It's a very reliable buy signal for gold. And that's what's going on here. Which is this? What's that, a month?
Yeah, I'm trying to get rid of all these. I gotta get.
Okay.
Hang on, it's gonna take me a second. I don't have my delete all. I just need to get everything off my screen.
Well, look at the wave structure. You had this massive rebound. So we've had a one wave, A, B, C, and the B made a higher high slightly, or equal high. That's very bullish. The C wave was the one that did everybody ill, and the others couldn't believe it. And now we're starting, we're just beginning what could turn out to be an impulse wave to the upside that would be equal, if not greater, in magnitude than what happened from 15 upwards, from 16 rather, from the first half of 16. And that was an explosive up move. There was the fastest up move in gold stocks of all time, of 30 years. That doesn't happen by accident. This is sort of, and so and remember back then, with Hillary being the front runner at the time, the market went up because of fear of the Democrats winning, right?
Can you imagine the world we would live in today if she had won?
Oh, you can't even fathom it, I've been thinking about that a lot, actually. Imagine if Bush never made it onto that submarine. The whole world would be hugely different than where it is today. It's just amazing. Yeah. But
John, I've got a monthly on gold. Is that what you wanted? Going back to January?
Well, yeah, because look at the way this thing is starting to, curve upwards, and I think we put in a higher low right here, and then we put in another higher low right here. So, yeah, we just need buyers to continue to support the bid. Yeah. Have a look at the weekly. So that looks. I mean, we just put on another $1 in the gold price while we're speaking. So that's.
Yeah,
I mean, it's kind of got a base not unlike the natural gas, you know. And remember that the inflation and all the stuff behind the scenes is getting to a level where equal to where it was in 2011. So, and this is not unlike what happened in the 2005 when we broke above the 20-year trend line. You know, it was $500 gold. Now we're looking at 1,400. You know, 1,370. You know, if gold comes pushing up, and it's going to go through that like a knife through butter. You know, up to 1,500, 1,600. Even if it was, I mean, look at the measured move. You got a 1050 to 1350, $350 move. You know, add that to 1,200, and you're looking at 1,550, which I've had as a target for a long time.
I think that's a very realistic target. What kind of time frame do you have for it?
Yeah, well, look, you know, quick enough. I think the next couple of quarters could be very bullish. Remember,
that is quick. Yeah.
Remember, we were at $18 silver, and maybe 11 or 12.
A lot of us remember that too well, yeah.
We were about maybe $10 or $1,100 gold, $18 silver on September of 2010, and by the second quarter, which I forecast halfway through September, as silver was breaking out above 18.5, I said we could hit $50 by the second quarter of 2011, and that's what happened. I mean, and it was amazing how rapidly it happened.
That was my last confession. Father, forgive me for buying silver at 18. Anyway, moving on. Go ahead.
So,
now, if you see right here on just what I do, we've got some pretty clear. If we get up to 1260, I mean, we've just got an open window to 1300.
It looks that way, and you know,
not that
and
there won't be
actually,
some back and forth, but I think this could be this path could be a whole lot easier than this path was.
Yeah. And remember, you got the biggest shorts. You know, look, that chart that we just looked at tells you. I mean, even today. And by the way, that chart should look better by this afternoon if the numbers come in right. You know, it may show a lot of the commercials covering their shorts. That's a huge deal in of itself. And by the way, the commercials who control the market, they're long all time. I mean, they've never been longer than where we are today. I mean, in all the history of 20 years of this incredible bull market in gold, they've never been longer than they are today. What does that tell you? They're hedging against upside prices.
Yeah, and look at what an important, guys. This is a weekly chart. When I draw fibs on a weekly chart, that's a lot more important than if I draw them on a 30-minute chart. Now, from the low to the high, here's a 38% Fibonacci retracement. From the last leg down, from the high to the low, 38% Fibonacci retracement.
Yeah.
Fibs on the whole picture. On the whole picture. This goes back to July I drew all the way back to, we'll call it 2016. So we got big picture 2016. Where's our support? And then we lay down on just the last leg down, which is in this year, April through now. Last leg down, as we try to move higher, the resistance is at a 38% Fibonacci retracement. And so when you get dueling 38s like that, you really should pay attention, because there's going to be a big reaction off this. You can see how price was sucked into it. I mean, look at that big green candle. Now, what happens from here? This thing could run to the 62, because remember I just said between the 38 and the 50, it gets pretty clear sailing. In fact, we've got pretty clear sailing from the 38 all the way up to the 62. here.
Yeah.
So this
Look,
could be
we
a
could
good
run up
time
to
to be long
13.
gold.
We could run up to 13, consolidate a bit, just like that, you know, when on the way down, and then you got a kind of a head and shoulders bottom, and then boy, you know, you start getting up to 1370. Then you got a measured move that takes you from 12 to 14, say. So you got a, you know, $200 upside from the 1350, from the 1370, which takes you up to where we're looking for, you know, which is about 1550, 1600, 1550, 1575, somewhere like that. And if this becomes an extended, you know, upside move, remember we are looking at officially at an ABC correction. You know, there's no limits on how high this thing could go.
I agree.
And we're looking. I mean, look, you gotta go back and look at. I mean, it's kind of interesting that platinum of all things is up today, in a day when, you know, supposedly the economy is slowing down, and you know, you would think would be negative for platinum and maybe negative palladium, and yet these two are up today. Why don't it's the same syndrome that we had after 2007. Why did commodities go to all-time record highs in 2008, led by the beans? You know, and so the you know, it's quite likely that 2019 is going to be a big year for commodities.
All commodities? You talking salt?
I think so, yeah, because coffee. Look at cocoa. Cocoa is up huge today.
So then we're also talking inflation, right?
Oh yeah, I mean, inflation is being, you know, I mean, look, the most recent numbers that came out, we're only a smidgen away from being at the same levels when gold was in 1900. So it's got a lot of catch up to do, and that may be the big upside surprise. You know, when that bond trader, that legendary guy who said, you know, 2400 gold, he was a bit early, but he's probably going to be proven right, and you know, it could happen very rapidly. I mean, we could be looking at an epic first quarter of next year in the metals. Especially, I mean, imagine if we get up to 1300 or 1350 by the end of December, and we're closing out the year, you know, getting up towards 1400, ready to break up through that rectangular kind of consolidation. And look at the gold stocks today. I mean, look at Royal Gold, look at GOLD. These stocks are acting tremendously today.
Okay, I'll go to that chart right now. Hey guys, listen, I want you to make note of these numbers, all right? Because we're on a weekly chart. It's a big time frame. You got these dueling 38s here. 1245 to 1255. Now, I know that's a $10 spread, but just, you know, bear with me. This is a weekly chart, so the implications are big. Now look at the indicators. What do we have? A bearish cross. We were red and falling, and gold went from, stand by, from basically 1300 down to 1170. You can do the math. Okay, now we're not interested in this balloon and climbing because price is below the BBC. But look what's up. We're about to get a bullish cross. If we pull back, and if we hold these dueling 38s on a pullback, I think we take out the 62. I think we could. You see right here where these two intersect? That's hidden resistance. Nobody knows about it except you, because I just told you, and I won't mention it again. Unless you're a partner or a passport holder, then I'll teach you all about it. All right, so write those numbers down, 1245, 1255. In a month or two, you'll be able to look back on the market and go, whoa, that was the defining point for the last move. I'm not talking about eternity. Just for the whatever move's coming next, the market will show you what it's doing before it does it. So you can go along for the ride too. That's really the greatest message that we try to get across every day. Just do what the market's doing. Don't try to be more clever than the market.
Can you go back to the chart for a second?
Oh, the one I was on?
Yeah.
People get in trouble trying to outsmart the market. You can't. It's too smart.
That's really, look at that breakout. I mean, and look at your 38. I mean, boy, you know, we're going to blast through that.
It does look that way. It does.
Yeah.
I'll get some confirmation.
You know, this might be one of those times when we gap higher on Sunday night in the gold. You know, that and just gap and go. That would be epic if that happens.
I can tell you this, guys, just based on historical observance. Price is going to be attracted to, come on, right? That's where price is going to be attracted there. I'm not saying it's going there tomorrow, next week, next month. I'm just saying over time, you see how that weekly candle is pointing up. We're headed to 1320. How long does it take to get there? How many pullbacks along the way? I don't know. It could happen overnight. It really could. In the grand scheme of things, for gold to, you know, pop 20, 30, 50 bucks, John, that's no big deal, right? Not given the current economic climate and all the things going on around the world. Oh, and I wanted to ask this, a little off topic, but last Saturday night, the big dinner between the dueling presidents, did Trump know they were gonna arrest Huawei CFO?
They say he didn't, but you know, you never know. I doubt it if he.
But you smiled. You smiled when you said that, right?
I don't know. I just think, given the meeting went so well, I think it would have been hard for him to not give away something if he knew that. So, yeah.
You know what? I would have said this guy's got the best poker face in the world, but he tends to just talk a little too much. If he could get a hold of less is more instead of saying it all twice, I think he would be better served.
Yeah, no, you're right. You're right. You know, he doesn't have to say, you know, this is a most successful administration or something like he did in the tweet this morning. You know, people can figure that out for themselves.
He stood up at the UN and said that, and they all laughed at him, not with him, at him. And that was a sad moment, but he got beyond it because he's Trump.
Yeah. You know, there's a risk of things going wrong here, so big risk. So, you know, yeah, on everything. But generally speaking, the way he should be, I think, look, he's kind of played the first couple of years bad cop. If he plays the next couple of years kind of good cop and becomes more complimentary to people, praises people, and which he does quite a bit anyway, but does more and a little bit less, you know, the rest, I think he could win a lot of people. I knew I was going to say it's interesting because Trump's chart on the Rasmussen poll, he has been a whole year banging away at the 50, right? Whole year.
Right.
It honestly looks like it's going to break out above 50 here any day, and possibly quite strongly, you know, maybe to 52, 3, 4, 5. That will be a big deal when that happens, because, you know, even though he mentioned this 75 number this morning, you know, something could happen the next year or two that could actually get him up in the 60s, then about 75, but you can never say never, you know. And more and more people are they're getting used to him, and the fact that his approval rating, I mean, is way better than Obama's. You know, if you go on the Rasmussen poll, you can compare the two, and his, you know, it just looks like he wants to break out, and probably going into Christmas, the people feeling good, you know, the ratings could actually crack up a bit here, you know, going into the end of the year, and possibly, you know, build on themselves, because, you know, a lot of people are starting to get the memo about China. They're hammering away all the time now, and the fact that China's sort of starting to respond. I mean, look, everybody, you know, of course, CNN was hatcheting away about, oh, you know, it's the biggest deficit ever, or 10 years. Well, obviously it is, because we got the strongest economy in the world. You know, we got a lot of buying power. We're buying more stuff from China because everybody's doing well, and the dollar is you know, the Chinese yuan's gone down 10%. That makes their products a lot more affordable. So it's no wonder the deficit is bigger. But nobody ever stops to explain that to the morons on TV who are you know, dumb enough to sort of, try and gotcha, continually get you for things like that. We should be, in a way, the fact that the deficit is big speaks volumes about how strong this economy is. In 2 years flat, in less than 2 years flat, I can't remember where the worst point of the U.S. was competitively over the last 10 years, but I think it was at one point may not have even been in the top 10. And guess where we are today? Numero uno, number one. Again, the U.S. is the most competitive economy on earth. Back on top. That is the ultimate approval rating for Donald Trump.
And we're a net exporter of food.
Right. Of oil. I mean, you've seen the Louisiana terminals? They're breaking all kinds of records shipping oil.
Yep.
That's just unreal.
It is.
And of course, that's incredibly bullish for America, because that's, that like a brain drain, that oil drain, money drain that's been going to the building the Middle East for the last 20 years is now, back, it's being recycled here in the U.S. It's building the economy here in the U.S. In fact, when you take, as I've said many times, when you take Mexico, Canada, and the U.S. combined, I mean, we're 19 million a day barrel producer. We're by far the biggest in the world. And the higher the price is, actually, it's going to circulates more money and more benefits to the economy.
Does Alibaba ever become $1,000 a share company?
I wouldn't rule out anything about China, because when they're having these staggering one day, 30 billion plus days.
Tens of billions of dollars of revenue in one day. I mean, you only have to take a very tiny sliver, off of each transaction to, have some folded money to put in your pocket.
This guy with Alipay and, I mean, if you think Uber is big in the world, I mean, the Chinese Uber is with 1.5 billion people is just stratospheric. I mean, when Alibaba went public, soon after going public, the guy was doing 6 million transactions a day with the Chinese Uber, Alipay. They're probably doing 6 times that today. So this is just a money, force of money, and that you've got to go back and look. Just go take a chart of Baidu, and take a chart of Alibaba, and look at where they had the post IPO slump, just like Facebook, and then they went into high gear, and they were just phenomenal investments. Both of them have been incredibly profitable.
Have you ever bought anything from Alibaba?
Yeah, we have. Yeah.
Okay, I've been on their site. For me, I find it a little bit confusing. And I was about to order something one day, and then I saw that the ship time was almost 2 months. And so
we've had stuff come fairly quickly from over there. Yeah.
Because I said, well, I'll just go to a different vendor on Alibaba and for the same product, and it seemed that all of them had a shipping time of about 4 to 8 weeks, as I recall.
Yeah.
And that's perfectly fine for a retailer who, is planning strategically long term. I mean, that's just a great way to get your stuff. But if you're looking to get something, we're spoiled by Amazon because I'm so close to the distribution center. If I order something from Amazon today, it'll be on my doorstep tomorrow morning. It might even show up. It might even show up tonight around dark.
That's amazing.
Yeah. I am incredibly spoiled. So I'm getting something from China.
One of the most incredible things about Amazon. I mean, I'm sure there are missed deliveries and occasional screw ups, but they're pretty. You never hear about that. You never hear of any.
I mean, they come to my house 5-6 times a day.
Yeah, but I mean, you very rarely hear of.
I think that is maybe. I was thinking about this the other day. I said, okay, we got 5 packages today, but Amazon had to come to our house 5 times. That doesn't seem very efficient. So is it better to get it quicker? I mean, what items could have maybe been assigned.
Maybe,
order
you know,
point
maybe
of
they're
the
working
level of
on that
priority.
synchronized technology. You know, that'll come. That's probably the next big thing when they'll be able to.
And I'm going to go so far as to say it was in a span of 5 hours. In a span of 5 hours, 5 different drivers came to my house and delivered a total of 5 packages, all of which were poorly packed. My wife gets really irate every time she opens this big box. It's got these blow-up plastic things in it, and there's a little tiny item in there. Can nobody say get a smaller box?
Yeah.
It's just such a waste. This company, they're so profitable and making so much money. If they're bleeding that kind of money in the shipping department, I mean, they're spending 3 times on shipping what they should. I know they get great rates and whatnot, but just the packaging itself, they're spending 3 times what they need to spend fulfilling these orders for people. If Jeff would just walk through the warehouse one day and see how they're packing these boxes, everybody would probably get fired. It's insane. All right. That's ratting on Jeff. What else you got?
Just a minute. I think we might be getting to a point here. Well, first of all, everything we've been saying
Here we go.
is starting to look pretty grim, you know. We might get a bit of a bounce here, but if we don't, it's probably curtains for this market. But the only thing I'd say is you can never rule out a late afternoon rebound. You know, that could still happen, but
yeah.
65.
This is the one that we put out right before the market, guys, and the one that we talked our way through a bit in the live training room today. And that one was.
Yeah, it looks like we're gearing up for a kind of a crescendo, Dwayne, where we could, you know, the next leg down off this rectangular of yours, it could be a pretty rapid event, and you know, between now and Tuesday, and look at the gold. We're 1254 now. The silver's breaking out. It's definitely getting to a point where we're going to go into some sort of a, you know, an event here.
Today, Sunday night.
Both, maybe, because, you know, when we're down this bad, 452 on the what are we down? 500 on. We're down 500 on the Dow. 513.
Guys, you always hear me talk about important prices, important areas are almost always tested. I want you to look here. We had this last alert. This sell 2648. Now what's happening is we're coming down with momentum into this 2648. That's like a secondary trigger. I know as you move into profit, most people shed contracts. This is a situation where you would actually consider adding contracts because the market's telling you, you got it right. You're heading in the right direction. It's confirmation. Yesterday, we wanted to sell 2648, not 58. We needed 48, which was what was right. But today, 58 was right. So it was kind of a freebie from 58 to 48, but the gravy may still be on the other side because we don't know that this 26-point drop staring us in the face, a duplication of what happened yesterday, we don't know that that's the bottom. All right. Anything else, sir?
Just 1 second. No, listen, that's pretty much it. It was great. Very good show today. Thanks very
thank
much.
you.
Enjoyed it a lot.
Thank you
Thanks.
very much. I look forward to talking to you on Monday.
Okay, great. Thanks.
Okay. Have a great weekend. Okay, guys. Yeah, the time sort of flew by. Good markets will do that too. That week 16 recap. I haven't finished up week 17. I did week 17 up through Thursday, Wednesday. Yeah, through the holiday. Cleverly called it the week 17 midweek recap. So I'll just show it to you. I have to copy and paste it. week 17 is midweek. So we still have 2 more days left. So we had 22 profitable trades at the final target. 1 made it the first target. 8 never triggered. 5 stopped out. So up through Wednesday, 18% of alerts were stopped out. So far during week, I should say 17. This is week 16. This is week 17. Midweek. So, alright. I'll finish the recap up and I'll publish the results later today as I do. Alright. If you have any final questions, put them in the chat box. Try to stir you up today. I hope it did. Hope it gets you thinking about what your passion is. Because if you're not passionate about your trading, go do something you're passionate about. Maybe you were passionate when you started, but 5 years of sim trading or 5 years of one contract trading up and down, boom and bust, maybe it just burned out. And maybe that passion can be rekindled. If you book a mentoring session with me, we can talk. I'll ask you some questions. Together we'll discover if that fire is still in there, and if it's not, that's okay, because if you can get your mind off this, you'll find what you're passionate about. Steve Jobs said, find a job you love, you'll never work another day in your life. And because I'm probably going to work my whole life, that's a good thing to know. That when I go to work, I'm not really going to work. I'm doing what I'm passionate about. Are you? If you're not, that's okay. The good news is you realize it now, and you can find what makes you forget the hours. They fly by. It's that thing that wakes you up before the alarm clock, because you can't wait to get back at it. Because you kept waking up all night having another brilliant idea. And you just can't wait to get your hand to it. So the alarm hasn't gone off yet. And you just slide out of bed. You turn that thing off so it doesn't wake anybody else up. Slip your clothes on and out the door. Whether you go to a high-rise office building, a factory, or your extra bedroom. We're in an economy, we're in a world right now that has so many opportunities available in so many different directions. Do not cheat yourself out of a life. Don't do it. Don't do it. All right. A good word for the day, and then we're off into the weekend. All right. That work for you? So I know it works for me. We've been talking about an inside job all week. Now we're going to talk about, here's Friday. I said earlier, everybody's been working for the weekend. And it's here. Has the weekend even lost its luster? Remember, as a young person, Friday was payday. You actually got a paycheck. A person put an envelope into your hand. Maybe some of us are old enough we got paid in cash, but you get an envelope in your hand, and it's something, you stood a little taller. You had a little pep in your step because you had a little money. You went to the bank. You got your check, and then you went to the bank. And if you worked for some of the companies that I worked for when I first came out of the Navy as a young man, it was a mad dash to the bank to cash those checks. You didn't deposit them. You didn't take a picture with smartphones. We didn't have those. You get to the bank, and you want to get there first, because inevitably the last few people that try to cash their paycheck, insufficient funds. Now, those were wild and crazy times, and we were in the world of sales, and companies came and companies went. And anyway, long time ago, But my, how times have changed. So I'm asking you, now I couldn't imagine a Friday night that the wife and I did not go out for dinner. It's what we did. And then, of course, on Saturday night, I would take my girlfriend out. No, I'm kidding. I would take her out, my wife, both nights. But that's what we did. I mean, just sitting home on a Friday or Saturday night was like, you didn't do that. Like you don't go to church on Tuesday. You go on Sunday, right? Okay. I remember this is how much we change as people. I always wanted to go. My big thing was prime rib, and pretty much hers too. So we know all the fine prime rib places around town. We also know how to get that one coupon book. You know, your neighbor's kid tries to sell it to you, the entertainment. You pay $30-40 for it, but if you go out to dinner, there's hundreds of coupons. If you go out to dinner twice, you get your money back. We have bought those things for years. Nobody's came around to sell us one in a few years, so we haven't had one. I need to find those people. I need to get one. Because there's places like, I would probably never go to this Mediterranean place because Mediterranean is not my go-to food. But if I can go in there and eat, 2 meals for the price of one, now I want to try this Mediterranean food. I'll have a little of this, maybe a little of that. I can experience life. And I'm not being cheap. There's a difference between fear and wisdom. Now, my question today, as I taught you through all that, sometimes in life we reach our happy point, but on the way to the happy point, we often reach the breaking point. Sometimes we reach it more than once. 1 Peter 5:7 says, let him have all your worries and cares. Or casting all your anxieties on him because he cares for you. That doesn't kind of seem fair. I'm gonna cast all my stuff on him. He doesn't deserve that. Nobody does. In the film Limitless, actor Bradley Cooper discovers a wonder drug that opens up the entire capacity of his brain. If you haven't seen this, it's quite good. He can learn languages and complex math in a fraction of the time it takes normal people. He can recall almost anything he's read or seen. He can analyze more quickly and more in-depth than the best financial gurus. He is limitless. And he leverages his ability to earn millions and achieve great success. But the truth is, there really is no wonder drug that will fix our problems. Today, over 50% of people are stressed out by fill in the blank. This is a scientific study. Come on. Today, over 50% of people are stressed out by their relationships. It could be your wife. It could be your kids. It could be your parents. It could be your boss. It could be the neighbor. Every now and then we hear about two neighbors that get in an argument and one of them whacks the other with a shovel or shoots them or something crazy. Over 60% are stressed out by their work. Over 70% are stressed out by money. I find that interesting that money comes before work, because work is where you get the money. I know we have a generation following us that doesn't maybe connect the dots on that. But as far as that goes, I'm going to have to, I'm going to bow out and not pass judgment. You know, let him have all your worries and cares, for he is always thinking about you and watching everything that concerns you. Now you might say, if you saw my schedule, you know why I'm at the breaking point here. Well, who sets your schedule? If because of your schedule you're at a breaking point, maybe you need to hire somebody else to set the schedule. Oh, you set the schedule? You set the schedule? And you're breaking? I'm sure you can connect the dots on that. Oh, I'm not saying it's your fault. No. Just saying, give it a little thought. One of 3 people will either somebody else is going to set your schedule, or you're going to set your schedule, or you can go to God and ask him to set your schedule. One of the reasons that God allows us to reach the breaking point is to force us to come to him for guidance, for strength, and for direction. There's plenty in life that we all can't handle. But there's nothing that should be in your life that you and God can't handle together. If that were your first thought when you woke up every morning, that would not be a bad way to start the day. Before you even open your eyes, God, I know nothing is going to happen today that you and I can't get through together because of you. That is the indwelling. There's nothing that should be in your life that you and God can handle together. If there is something in your life where, as you are about to approach it and deal with it, you have to say, hey God, I need you to wait in the other room. God, I need you to step out of the room and close the door because I have to deal with this one area of my life. We can compartmentalize a lot of things. And we can compartmentalize to the point where we reach a breaking point. Because if we send him out of the room and close the door, how foolish are we to think that he doesn't know what's already transpired? But we do. We do what we have to do, and then we turn back around and go, what up, Jay? High five. And we go on with our life like nothing happened. Something happened. Something big happened. And it's those things that lead us to our breaking point. I don't know where yours is, or maybe I do. If I know you really well, I might know your breaking point. And if I'm mean-spirited, I might push your buttons until you break, just so I can see it. Hopefully I'm not that guy. But if you're at your breaking point, you could hire an assistant, or you could do a better job, or you could go talk to God. That's usually the best. It's the last place we end up when it's the first place we should start. And I'm working really hard before I pick up the phone to call a specialist about anything from IT to health. Let me talk to God. if nothing else, by the power of the Holy Spirit, he might point me in the direction of the right phone number. One that he's ordained, one that he feels good about, one that he has a relationship with too. And so I end up going to that doctor or that IT guy. Turns out we're both believers. Turns out we got all kinds of stuff in common. It's probably just a coinky-dink, right? Okay. Okay. Remember, when you're at the breaking point, you're there for a reason. God wants you to turn to him for guidance, for strength, and for direction. What do I do next? Ask God. He may not tell you go left, go right. He might say up ahead there's a guy wearing a red baseball cap. Ask him. He's got the password. Or the secret decoder ring, or whatever you need. I don't know what you need, but God does. That's the thing. You're asking the guy for something who already knows what you need. He's just waiting for you to act. You have not because you ask not. So if you're at a breaking point, you say, God, help me. He will. Well, unless you're on the naughty list, and then, sorry. No Christmas for you. There's plenty in life we can't handle, but there's nothing in life that you and God, or I and God, cannot handle together. The secret is in handling only the things God wants you to handle, and entrust the rest to him. And the only way you'll be clear on what it is he wants you to do and what you need to let him take care of, talk to him. Some people call it prayer. Talk to him. That's our good word for the day. And the week. What do we got here in the market before we go? Swing low. Well, my platform's acting a little creepy today. I don't know if it's the platform or my computer, honestly. I think it's the platform. Not casting any stones, Mr. Burt. I'm just saying. Low 26.31.50. Okay. So from 58 to 31.50. I have a calculator. Important guy like me shouldn't have to do simple math, right? 26.58. I'm just kidding. I usually use a pen and paper because I can't find the calculator. Minus, what did I say? 26.31? Come on, pop up. That's a lot of work. Should have wrote it down. I think it's 26.31. 26.31. Okay. 26.31.50 it was. That's 26.5 S&P points. Since we ended the live training room today at 11, right about 11:15, I think was when it triggered. 6.5. Now, I'm sure the question must be, well, is there an exit signal yet? I'll show you, but think about it first. Those of you that, partners, passport holders, you know what the indicators look like. We talk about important prices, important areas, almost always being tested. So we come down 16 points, we go back to test, we come down 26.5 points, this last leg down. Could we go back and trigger again? I've seen the S&P. It wasn't too long ago on a Friday, actually, that the S&P triggered like this 5 times in a row. Same number. So when an alert comes through the pipeline, don't look at it like a one-trick pony. Now, it is true that on this one we triggered once, and we only triggered once, and once. I actually could have got a little bit of trouble right there. But here at 16 points, back up, 26.5 points, perhaps back up. I can't say until we're back up and above. Then the possibility for another leg down becomes real. Could the bottom just fall out from here? Of course. And is this the most recent swing low? It is. 26.22. We're at basically 42. We're 20 points off the low of the week here. Anything can and will happen. Now, you want to see a mathematical projected low? I said I was going to go. But you guys are so darn interesting. Okay. From here to here. This is just math. If you haven't watched the Fibs Made Easy webinar we did, it's at youtube.com/CFRN, along with the rest of our lives for the past decade plus. All right. Go away. I need to reboot or reload or do something. All right. So according to Fibonacci's math, 13th century math nerd, he and his rabbits said that price could potentially go leg, retrace leg. On this leg, it says that price could go to 2640, and it might find support. It did. It bounced up to 2647, and then it dropped all the way to the 50% extension, hit 2632, and then closed back up here at that 38. If it were to do a 100% extension, that means the distance of this leg would become equal to the distance of, or this leg would become equal to the distance of this leg. So that would put us all the way down at 2600. Doesn't mean we're going there. Doji represents indecision. There's 4 minutes left in the life of this candle. It's going to close almost exactly where it opened 30 minutes ago. It could close with a little red body, a little green body. Actually, there's 4 minutes left. And I find that often 80% of the movement in a 30-minute candle can happen in the last 10 minutes. Sometimes the first 10, but it seems to be more like the last 10. It's just a time thing. People look at different time frames, and then they look at those at a certain time. And so it's people taking action. The computers that are pinging the market, they're firing relentlessly. It's like machine gun fire. See, we're developing a red body here. This is a 30-minute chart you're watching. So, Fibonacci's math told us that once we had this high, this low, and this retracement, that from there price might go here 26.49 and bounce like it did. It says then you might go down here to 26.40 and bounce. And again, that was a, what was that, 10-point bounce? Something like that. 8-point bounce. Okay. And then says, well, you could go down here and maybe find support at 26.30, 26.31, 32, 26.32, and it bounced from 32 up to 41. 9-point bounce. So we're just about to close out here. We still got 2.5 minutes. Anything can happen. And that anything can happen thing really comes into play, in my opinion, in these final 10 minutes of this 30-minute candle, and more, watch an hourly candle sometimes. Look at the last 10 minutes on an hourly candle. Remember, Wall Street day sessions, when do you get an hourly candle? At 10:30, because the market opened at 9:30. When you trade around the clock, as we do, Globex opens at 6 p.m. Eastern. That's when the new session starts. Monday session will start Sunday night at 6 p.m. Eastern. So we're going to get a new hourly candle at 7 p.m. Eastern. See, our hourly candles show up at the top of the hour. Day session traders, stock traders, their hourly candle shows up on the half hour. Hope that makes sense. Now we're building a green body. And we've still got 30 seconds down to the wire. And then I really gotta go. And paint. There we go. So we're still at the, right here at the close of this candle. Did anything just happen that would give us reason to take action? No. If we were to do anything, we would want to take advantage of this move back to the downside. Price has been there, it was rejected, but if it insists on going there again, let's get below the body here, and as we approach this previous swing low, let's get our stop real tight. Now there's 6-7 points inside of there to work with. And I know it doesn't look like a lot because of the way it's scaled, but I'm trying to get as much into the screen as I can. And then if you take out this low, then you've got another 10 points down to the 62 extension. And then you've got 23 points down here. Yes, can I help you? May I help you? Oh, that's John. I'm sorry. I forgot to turn his mic off. Hold on. Sorry about that, John. All right. There we go. Oh, there were a bunch of requests today for special price, special offer on the Passport. I'll be in Telegram this afternoon at CFRN, the number 1. At CFRN, the number 1. Or just give us a call. Toll free, 833-464-6381. I think. I wrote it down because I thought that would be a good thing. Yeah, 833-464-6393. I had part of it right. 833-464-6393. And it spells 833, in God we trust. And we do. I hope you do too. If I can help you in any way, you need a mentoring session, whatever it is, reach out. Support at CFRN.net, or I'll see you in Telegram, and I will see you Sunday night on the Globex Open. The Logic 247 Emini Alert service, which is included with the passport. We begin operation 6 p.m. Sunday evening on the Globex Open. The 24 service continues through Friday afternoon, 5 p.m. Eastern. The system's down for a day and a half. Back up and running on the Globex Open. I'll see you there. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.